This week's crypto recap. The US government penalizes crypto companies. Ethereum is in the spotlight again with more ETF filings, and Solana is slowly creeping up with an incredible Visa announcement. We discuss all this right now with Matt and Nick in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. We'll discuss the market update with Matt, followed by the CFTC enforcement action. So Matt, take it away with the market.
Thanks, Leon. Another slightly lower week for the crypto market, with BTC down 0.6% for the week and ETH down 1.5%. Continues to be very light trading volumes or just overall activity going on exchanges compared to earlier in the year. As we said last week, there was a public holiday in the week, so it sort of also was always sort of going to be a quieter week, I think, and that's exactly what happened. So that's really it. There's not too much to report. We just keep sort of humming along for Bitcoin in that middle sort of mid 20,000 area, and then ETH sort of seems to keep trading between sort of 1,600 to 1,800. I feel like it's been in there for quite a while now. So that's really it for our short market update this week.
Well, thanks for that, Matt. Sometimes, we just wait and we wait and we wait and we're poking Bitcoin for it to do something, but sometimes it just doesn't come. But at the end of the day, something will happen in a month's time, in a year's time. We're here for the long run. So all good, Matt. Thank you very much for that update. Now let's go on to some of the biggest news in the week. Let's talk to Nick, our research analyst over at Collective Shift. So Nick, what's happening in the regulatory side of things in the US? I know the CFTC have gone after some specific crypto companies. What's the scoop, mate?
Yeah, so this week was really marked by more action, but this time from the Commodity Futures Trading Commission, the CFTC in the US. A lot of the talk has been around the SEC and their enforcement actions, but we've seen the CFTC come out with three DeFi companies, Open Inc., 0x, which runs the 0x protocol, or help build that, and then another one, an Algorand, which is Derivatics, in their sort of Derivatics Incorporated. So we saw that they were charged with offering legal derivatives trading, and so they were really essentially alleged at operating these without compliance or without the proper licenses to, and just as unregistered trading platforms. So we saw them, I think, settle for the respective about 250,000, 200,000, and then 100,000. So they're relatively smaller penalties, but they've come out and settled with them, and it's just another attack, I think, on DeFi.
Thanks a lot, Nick, for that update on that. I've got a question for you, though. So a lot of these protocols that say they are decentralized, right? So I haven't used 0x myself or Open Network. Actually, I did used to own their token a while ago. But these protocols and these companies out there, they come out there, they're saying we're decentralized. But all of a sudden, the CFTC can go ahead and go after them in enforcement actions. So right now, probably the most popular decentralized options derivatives platform is GMX. That's on Arbitrum as well as on Optimism, if I'm sure on that. So these tokens and these GMX protocols, do you think they're safer than these other protocols, or it's just free reign? What do you think?
I definitely wouldn't make a statement in terms of if they're safe or not, just because, especially, from a legal perspective, these things are very open, and it looks like from what the CFTC are saying here, that kind of doesn't really matter how decentralized you are, maybe, but there was a quote that just said, by one of the head of the CFTC that said somewhere along the lines, DeFi operators got the idea that unlawful transactions became lawful when facilitated by smart contracts. He went on to say that they do not. So this is some pretty out there, and there's no wiggle room there. It sounds like they're saying that any of these DeFi platforms or protocols, if they're using smart contracts and don't have appropriate licenses, they are unlawful. So it's really going to be interesting to see how, as you said, bigger derivatives exchanges like GMX do operate, whether they did service like US customers or whether they steer cleared. A lot are just ignoring the US completely. So I think it's up in the air now in terms of if we're going to see more enforcement actions, considering that the penalties were quite small in respect to some of the other ones out there. So questions are if they're going to target some of the low-hanging fruit, the smaller dexes on Algorand, less used, whether we're going to see bigger action on some of the bigger players in the space. So I think a lot of uncertainty, especially in this area, which I think we're going to see much more of.
Yeah, that's definitely a technique they could use. Target the small fish, then build a case history and case law, and then they use that to go after the bigger fish. So something they could do there, but we are not legal experts over here, so make sure you follow your legal representative for more information there. But let's move on. Matt, I want to talk about the new accounting rules that is now allowed for Bitcoin, I think specifically in the US. So this is actually going to help a whole bunch of companies out there. What's this new accounting rules? I've never heard of them.
Yeah, so the Financial Accounting Standards Board, the FASB in the US, they basically just try to set sort of frameworks for essentially the accounting industry in the US, just to basically do accounting as well as possible in the public's sort of best interest. This has been coming for a while with respect to, there's always been queries about how Bitcoin and, well, by extension, other cryptocurrencies are sort of marked by entities or companies that are holding Bitcoin. When you buy it, for example, historically, when you bought Bitcoin, let's just say if you bought it at $5,000, it went all the way up to $50,000, and then it came back down to $20,000. It's like, what price are you actually meant to market at? It sort of just makes sense, I think, to most people to be like, oh, just market at whatever the current price is. Believe it or not, all this time that hasn't been the case for what companies are required to do with their treatment of how they report Bitcoin and other cryptocurrencies, the value of them. But now, officially, it was unanimously approved last week that they would sort of transition and I guess like strongly suggest companies report cryptocurrency holdings at their sort of going rate, if you will. So basically, to really dumb it down, it's just the new rules say like that you're holding Bitcoin, it's at the price that it's currently worth. So these companies will need to reference, where are you getting your price from? And then they'll just have to report that. So it kind of makes sense. The likes of, Tesla, even MicroStrategy and some others who hold Bitcoin, this will affect them. So yeah, I think it was, quite significant, or just more of a sort of advancements for Bitcoin getting integrated into sort of the legacy sort of financial world.
Yeah, and Matt, I do love it that it actually comes into effect in 2025. This is like a little bit after the next Bitcoin halving, which means less supply, and now they're much easier for them to manage the entire thing. So hey, looks bullish from here, just from this little standpoint. But I want to dig a little bit deeper. You said this is pretty significant. So would you agree that this actually removes one barrier for these companies so that they can easily manage their Bitcoin holdings? At least one barrier, one complication. Would you say so for them?
Yeah, I do think it does, because currently it was just a very strange sort of pricing or a way that you would treat Bitcoin with. I think it would just not truly reflect the state of your business or company. If it sort of lost the value, I think it would permanently sort of be treated that way. Like it wasn't allowed to sort of grow in value, given how it was treated historically, which again was just a bit awkward and a bit of a complication that was just, again, unnecessary, and the new ruling sort of, reflect that was unnecessary. So now you take that away from the equation, and now you look at maybe a company board considering whether to gain some exposure on their balance sheet of Bitcoin or another cryptocurrency. They can at least, have that certainty that now they know how to sort of treat that for accounting purposes. Of course, there's still many other factors to consider whether you should go ahead and gain exposure to Bitcoin. But I think, to answer your question, it is significant because it does remove that, at least one of the many barriers. So progress, slowly but surely.
Oh, I love that. Definitely. Slowly but surely progress. We will get there. Thanks a lot for that update there, Matt. I want to move on to Nick. Now, Nick, everyone has heard about the spot Bitcoin ETFs. They were all the rage even a month ago, a couple of weeks ago. But now we've actually upgraded ourselves. It's no longer Bitcoin ETFs, it's Ethereum ETFs. So can you give us a scoop on this? Who's filing and what are they filing for?
Yeah, so we saw ARK Invest and 21 Shares sort of come together with another exchange, and they filed for a spot ETH ETF. This was then followed by, I think, Van Eck, who was another big player in the space who, were also filing Bitcoin spot ETFs. So these really represent the first spot ETH ETFs in the US. And if they were to be approved, which we could get into that maybe later, whether these would be the first ever in the US. So really excited to see whether Ethereum's following a similar course of Bitcoin, because we're also speculating about whether futures ETH ETF applications will be passed as well. So a lot going on here, especially with the Grayscale announcement, which we covered in our last podcast, in that big win, and whether this really will set the scene for Grayscale to even think about turning their ETH trust into an ETF and following the same lines of judgment, that the Bitcoin case had. And we're even seeing in those filings that the court case actually used some of the same arguments from Grayscale for the spot ETFs in the application. So I think it's really positive, and it really kicks off a timer for a decision to be made, even if it's an unlikely one.
Yeah, right on, man. And I know in Collective Shift, we have that list in the Pro Shift report that kind of outlines when these ETFs are going to be next reviewed and if they get rejected then, and we keep that updated. So if you are a Collective Shift listener, make sure you check out those dates we have there. But Nick, I've got some follow-up questions here. So you think these will be unlikely to be passed? Do you think they might get delayed, just like the Bitcoin ETFs?
Yeah, again, as always, take this as a grain of salt as well. You never know how it's going to play out, but obviously the Bitcoin ETF applications are, the focus here. And if anything's going to be passed, it'll no doubt be Bitcoin, just because Ethereum represents, I guess, a much more unclear market structure, perhaps, of exactly who's using Ether, how each traded in the market. So Bitcoin's definitely there front and center, and I think we will be surprised if we saw an ETH spot ETF anytime soon. I think if you're going to get anything, it would be the futures, like what happened with Bitcoin. But the main trend here is that it kicks off that 240-day decision timeframe for the SEC to make a decision.
Yeah, right. And I want to double down on what you said there. There are going to be so many people and companies upset if they get an Ethereum spot ETF over a Bitcoin spot ETF, because people have been waiting for a spot Bitcoin ETF for a very long time now. That would just be funny in this space, right?
I think we can never count out anything, but I think that would be the most surprising thing.
That's right.
I personally have seen in the market so far.
Yeah.
ETH one before Bitcoin.
That'd be crazy. Well, thanks a lot for that update, man, Nick. Appreciate it. Now, Matt, let's move on to you again, my friend. Let's talk about Visa and Solana. There has been a really great announcement that came out recently. Now, we did cover Solana in the last, I think, 2 weeks ago, or even last week, where they had a Shopify integration where they were doing some stablecoin rails. But they've even improved on that. Man, Solana is on the tier recently. Matt, what the hell is Solana doing now?
Yeah, another really positive sign for Solana, of course, but the whole crypto industry last week, when Visa, so the operator of the world's largest payment network, came out and announced that it is expanding its support for USDC, a very popular sort of USD stablecoin. They're expanding their support for settlement, sort of denominated in USDC, and they're expanding those capabilities to the Solana blockchain. So now that adds to so they've got 2 blockchains now. They support Ethereum being the first, and then Solana. So this is still considered a pilot program by Visa, but another very good sign of Visa, continuing to work within the crypto space, which they have for, several years now, and tinkering with different sort of crypto technologies for their payments. But now jumping to Solana is, again, another big sort of vindicating sign, in my opinion, and adds some validation to, I suppose, the use cases of Solana, which is a very different blockchain to Ethereum. So again, very positive sign. So looking forward to seeing what comes of this pilot program.
Yeah, I know. And Solana is just, I just feel like there's been so much FUD floating around with Solana. But Nick, I wanted to get your opinion here. What do you think about this announcement between Solana and Visa? Do you think it's pretty good? What do you have to add?
Yeah, it's just very notable because a lesser-known blockchain, Near, actually, I just learned that they were actually also sort of partnering to try and bypass a lot of these fees and merchant fees that you get, with the likes of using third parties. So it's this trend of using blockchains, I guess, as this public infrastructure to, settle transactions on, or to possibly, get out some other middlemen who are extorting a lot of fees. And I'm really excited for this wider trend to happen. And more importantly, from what we've said in the past, and a lot of our research is indicating that big names like MasterCard as well, although they're not creating any tokens themselves, they're definitely supporting and looking into, facilitating, public blockchains and using public blockchains, in a unique way. So really good signs with PayPal releasing their stablecoin. These big names, even though we had a horror 2022, we're still seeing these big names test out Ethereum, test out Solana, build on this public infrastructure and look to support it. Whereas I think it'd be a really dark sign if these big names were slowly ending all these pilots and backing away from the industry. From what I'm seeing personally, is really excited that after that, really horror run, that we're seeing these huge financial services companies really get into the space. And I'm only more excited once we get clearer rules of the road, that we're going to see more of these big financial services companies continue to follow the same route.
Yeah, that's right. And it's not just Ethereum and Solana. Like you said, Near, even Phantom as well, is making good strides in the financial infrastructure space. Thanks, Nick. Now, Matt, I wanted to come back again. There's been a whole bunch of FUD, which is fear, uncertainty, and doubt for Solana. What do you make of this? They're having some token unlocks now from the FTX debacle, which I think is FUD because that's actually not being unlocked now because it's still locked for a couple of years, right? So we're having really good news in the space of Solana, really bad news in the space. What do you make of it?
Yeah, I think it's very typical of a bear market where you see investors and just market participants in general just sort of finding things to poke at in terms of weaknesses of certain projects, always criticizing different areas of the space. It's sort of natural, particularly in bear markets. And as you said, these unlocks, what's all this about? Really, FTX now sort of going through a sort of liquidation and restructuring. They own more than 10% of all of the Sol token in existence, so Solana's native token. Everyone's sort of being, fearful, a lot of FUD, as you said, Leon, that people thinking that, all of a sudden, on any given day, FTX might sell all of that position. And if they did, of course, almost certainly the price of the SOL token would dump. Again, to as you said, Leon, this is sort of a gradual release of tokens. It was always going to be, even if FTX was still in business today and never was fraudulent, it would still be the case where they were sort of vesting, it's called, their tokens over time. I think that goes until 2028. So, of course, that will be sell pressure by the people handling this liquidation and being responsible for selling all of the holdings that FTX had, not just for Sol, which is by far their biggest, of course, in percentage terms of the overall supply, but all the other altcoins too will be gradually sold off in a way that's, for the liquidators trying to maximize the amount that they can get from in terms of dollars. So, of course, they're not going to be incentivized to dump all of the position because, of course, that would likely happen to the market. So another good example there of, taking a headline or something and reacting to that versus, just prodding a bit deeper, which we like to do a collective shift, and then sort of taking that information and sort of, making up your own mind about what that actually means. In this case, with respect to, the token of a quite a, popular blockchain. We weren't saying that about 12 months ago or so, but back to Visa, I think it's just more validation of Solana. And just to wrap up our Visa coverage here, I do think I have been thinking about this more as we've been covering payments the last few weeks. And, Nick, all three of us really been in crypto a long time now. For me, I'm coming up to 6 years full time in crypto. And to this day, I honestly think that payments are fast becoming the biggest use case of blockchain technology so far in my time in crypto. I think it's a very boring reason. I think, as Nick said, it's a lot of back end things where it can really, really cheapen the fees for the merchants and the payment network providers like Visa and MasterCard, as well as the banks that they are hooked into, which actually take a lot of that risks that we know today. When you go down to your cafe and you pay an extra 2%, 3%, a lot of people get angry at Visa and MasterCard, but really it's mostly the banks that are taking that extra percentage because of the risk associated with chargebacks, things like that. So all of these are such a good reason why permissionless blockchains can be very valuable, And it's why we're seeing, as Nick covered, Visa and MasterCard lean in further to crypto, despite the harrowing sort of PR nightmare that crypto has had in the last 12 months. So again, as Nick said, if they were sort of stepping back from this space, personally, I would get quite deflated because, as I just said earlier, I think payments for crypto, is currently on its way to become like the number one use case. Of course, this is an expansion of sort of the use case of stable coins, which Nick has done a lot of work at Collective Shift, kind of just highlighting how much of a use case that is for blockchain. So it's really great to see some encouraging news, I suppose, to wrap up this Solana and Visa pilot. I will emphasize again, pilots, but it's all moving in the right direction.
Yeah, that's right. And these things take time, don't they? Like, it takes actual time for them to plan it out, do the pilot, get great data, and then all of a sudden they're like, yes, well, let's do some more here. And all of a sudden, your Visa and MasterCard is a lot cheaper now with less taxes and little add-ons and little extras on top. And all of a sudden, hey, every business wants to use that protocol because it actually saves them a whole bunch of money. So it just takes time. And that's it, man. Thanks, Matt, for covering that for us. Let's move on. Let's wrap up this Solana news. Let's talk about some other news in the crypto market in the last week. Nick, I know you are a gamer yourself. I am a gamer. You might have been playing Starfield. I've been playing Baldur's Gate 3. But what's the latest news with gaming in crypto?
This is just a quick one to go over, just because it's something that I actually missed in the news headlines. That was a key developer and game producer, Krafton, which I don't know if any gamers out there have heard of Players Battlegrounds. It's just a popular sort of free-for-all game that was really big a few years ago. They're big in some mobile gaming as well. They come out and said that they're going to be creating a blockchain on the Cosmos sort of stack and ecosystem, and they'll be using USDC for payments. So this is another example of, even on the theme of stablecoins, which we were talking about, they were seeing more rapid adoption of USDC as well, which I think is a main theme from a lot of our podcasts in the past. And this is a really big one, considering we're seeing a few gamers or gaming projects kind of fall off the radar. But we're still seeing some take the leap and start to test out blockchain gaming. And I think it's going to be another while until we see what a lot of these big gaming companies have come out with. So I'm really excited for the next maybe 12 to 24 months to see tangibly what these games are and if people start to use them and adopt them in a meaningful way.
Yeah, this is like an extension of what Matt was saying before. It's really like an extension of the stablecoin infrastructure we have, because they're coming here to, settle with USDC, stablecoin. The other thing I saw really interesting of this was they chose a Cosmos chain. Now, I don't usually affiliate USDC with a Cosmos chain, and they're starting their own layer 1, right? So, usually you go to a layer 2, like an Optimism or a OP stack or an Arbitrum 1, Arbitrum Nova, something like that. But they went to Cosmos, which is pretty interesting, isn't it?
Just to add in there, Leon, that USDC and Circle, who is issuing and behind the USDC, along with Coinbase, they've actually been rapidly spreading and creating their own sort of core platform for issuing native USDC rather than sort of wrapped or, without as strong security guarantees. So they're issuing native USDC on Cosmos. They're doing it on Base. They did it on Avalanche before and then on Solana. So they're rapidly sort of spreading USDC around the entire crypto ecosystem, no matter what chain you're on.
Yeah, that's right. I have seen them do that. It's just, they seem to be making the right moves so far, because everyone needs a good stablecoin, a good trusted stablecoin on their blockchain. It's very interesting. And as you said, just to break that down for people, natively means that it actually lives on that blockchain rather than you having to use a bridge and get someone else's version of USDC. No, none of that. It's actually USDC from Circle, a native, clean kind of asset itself. Let's leave it there, Nick. Thank you so much, man, for the update, and I'll catch you with our next game very soon. So let's go ahead to Matt. Matt, you did say there was some extra news in the market. I remember before the podcast, Binance. I think Binance is in a little bit of hot water again. What is happening with them? Maybe it's not that hot right now.
Yeah, it's just reports, Leon, of another sort of executive at Binance deciding to leave the company. As we sort of just keep reminding you of there, the listener, it's just a bunch of different events that are happening that don't individually point to anything being wrong with Binance. It's more just, really stacking up of, this circumstantial sort of evidence, if you will, for lack of a better term, just to, again, remind people to, consider, if you are keeping your funds on, Binance or really by extension, any crypto exchange, just make sure you're understanding that ultimately that is not really truly your cryptocurrency until you sort of withdraw it to an address. So just another reminder there that, developments do keep on going every week with Binance. It's been quite an ongoing case in 2023 so far. So yeah, that's it for this week.
Yeah, I think let's leave it there. We've covered Binance every single week, probably in the last month or two. So yeah, if you need more info, just come to the Collective Shift platform. We cover it extensively there as well. So Matt, thank you for that update. Now, listeners, let's go on to the last section of our podcast today, which is our rapid fire. Anything the members of this podcast found we appreciated a lot in the market, or something we think went underappreciated. So Matt, I'm going to let you take it away first. What did you notice that you appreciated in the market this week?
Yeah, Leon, this week, I think overrated or even just hard to understand is how Ethereum's co-founder Vitalik Buterin finds the time to contribute to certain academic papers. This was the first one he's contributed to in a while. This caught quite a bit of attention in the crypto market itself last week. What was it? He was contributing to a paper that was really proposing a new sort of what are called privacy pools. So we've talked a lot over the years about just how, crypto, there's been this almost sticking point in a way of, will regulators and out there in the world, in the US, Australia, everywhere else, will they let cryptocurrencies, scale to the masses if there isn't a way to, really confidently track and perform sort of KYC or anti-money laundering sort of policies. This sort of proposed privacy sort of protocol by Vitalik and some others really just finds or proposes a way that would, in a way, sort of separate criminal activity from sort of everyday transactions from, just regular people who are complying with the law. So, I think I really just wanted to highlight this just quickly, just because of this sort of ongoing, sticking point. I'll sort of keep that phrasing there of just the unknown of how crypto will sort of scale or will reach mass adoption if things around privacy aren't really fully fleshed out. So this is, I think, clear evidence to me, if someone like Vitalik is even focusing on this, clear evidence to me that this is such a sort of big problem still. And it's good to see that people are sort of putting their minds together and thinking of ways to sort of help alleviate this issue.
Yeah, Matt, I in my opinion, I don't see how crypto can actually go super mainstream without us fixing this whole privacy issue and anonymity thing and get it out from the depths into the shining light. So that's just my
particularly in a time when we are supposedly crypto protocols are supposedly losing tens of millions, hundreds of millions to like North Korean hackers, which is just such a bad PR look for crypto, like it or not. And again, that's another sort of concern of regulators who are trying to do everything they can in some countries to sort of restrict that entryway or flow of funds to sanctioned countries such as North Korea.
Yeah, we'll have to figure it out sometime. We'll have to come to it. It'll be a junction, and we'll have to make a very critical decision. So that's not at the moment. It'll come later. And Nick, I want to come back to you here. So what did you find, did you appreciate in the markets this week?
This one was for our Australian listeners who may have seen sort of topics around the Australian Senate committee rejecting an Australian crypto bill. You may have equated this with perhaps rejection of crypto in Australia, but I think it was important to highlight, especially on this podcast for our listeners, that this really wasn't much of a surprise in my mind, considering that all they said was for Australian senators to come back to them with a more fleshed out bill and proposal. At the moment, they were saying that it sort of lacked some clarity at the moment. It was too broad. And just to continue to consult with industry to work out Australia's sort of crypto policy moving forward. So as I said, not much of a surprise. People may have been confused if they saw the headline. So just to reiterate that we're actually currently in the middle of an ongoing consultation process. It's a 3-stage process with the industry in terms of how Australia is going to regulate cryptocurrency and sort of bring it up to scratch with the current laws, and perhaps give Australia's securities regulator more power, perhaps, or ability to confidently navigate the space. So this is just one to keep watching out for. No doubt, I think we'll see by the end of the year or maybe the start of 2024 some really tangible sort of laws hopefully come and guide the market.
Yeah, that's right. Because with how many people in Australia love crypto, like the government is going to be listening to the rest of the population, because we see really good benefits here. So we're not giving up on crypto so far. At least I'm not. And you guys, if you're listening, do not give up on crypto out there. Thanks for that, Nick. I want to share mine this week, which was a malicious person out there. They went whale fishing. And my friends, did they catch a big whale? $25 million from a whale's account was actually siphoned away. Now, how did they do this? This was actually called a token approval kind of phishing expedition. Basically, when you have your crypto token in your wallets, you actually go and sign a transaction, say, yes, you go ahead and use however much you want in my wallet. And so the hacker was able to do that, and they were able to withdraw everything because they used everything. They gave permission for everything. So this is just, my friends, a security reminder. Make sure when you are dabbling in the crypto sphere, make sure you have your security and the top highest threshold you can. And just do not approve anything you see. Make sure you actually know what you're approving. And if anything, go to revoke.cash and remove all of those token approvals. If you're using an old wallet, you probably gave permissions to use your tokens, and they still have your permissions. So we've covered this before. Make sure you come to the Collective Shift platform and check out our security center. And with that said, my friends, let's leave it there today. That is a wrap for this week. If you're looking for more insights, make sure you check out our weekly revamped Shift newsletter, providing free weekly market insights every Friday, my friends. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter. We'll see you next week.